Let's ask Liz Ann Sonders. She's Chief Investment Strategist for Charles Schwab. It's good to see you. Thanks for being with me. Up 4% on the week. Why are we rallying? Are we in tune with the Fed? Are we trying to get ahead of a CPI report we think is going to be pretty good?
I don't know if it's sort of front-running any kind of whisper number on the CPI. I mean, the leading indicators have suggested that there should continue to be downward pressure on CPI, certainly at the headline level because of what's happened with energy prices. I think the rub might be that the core change will be a bit stickier just because of the shelter components, which probably still have a little ways to go before they start to turn down. I think the market these days also short-term has a lot to do with just technical conditions being hit. You get oversold as we did at the recent lows, and you get a bit of a relief rally. And you see it in sentiment indicators in the very short term as well. So I think it's too soon to tell whether this rally is healthier or longer lasting than the one that went from mid-June to mid-August. At this point, it looks more technical than anything else. So
sounds like you don't put much stock into it, pardon the pun.
Well, I think it's too soon to tell. It's been a few days. It's the nature of the kind of volatility, not measured by the VIX, but just some of these reversion trades that happen over the course of a number of days or a number of weeks. I think the CPI report is important, and we'll see whether it moves the needle in terms of expectations for 75 or 50. Much discussion about the Timorous article in the Wall Street Journal pointing to 75, but that's obviously in advance of the next CPI report. So, Powell was pretty firm again yesterday, saying our job is not done yet. Brainerd was maybe a little bit more dovish by mentioning that there is a risk of over-tightening. So there's that back and forth right now that's interesting happening between the two most senior people at the Fed. Not that they're on opposing ends of the spectrum. It was just a subtle difference in their messages.
Sure. So you mentioned the potential for a more sticky, I think was the word you used, on the core. BlackRock's Rick Reeder tweeted a few moments ago, I want to get your reaction to this. In our view, the risk of a persistence to core inflation is quite real due to structural tailwinds stemming from strong wage gains and elevated shelter inflation. Ultimately, we think the Fed should get to a terminal funds rate of between 3.75 and 4, but then should pause and watch, allowing for, quote, long and variable lags to work their way through the economy. What do you make of what Reeder says? It sounds like in part you agree with what he's saying, but what about fully his prediction on what he thinks may happen?
Yeah, I think that's probably a pretty accurate assessment of what we're likely to see. I think what Powell tried to emphasize at Jackson Hole, I think, without saying it explicitly, is that there is a difference between a pause and a pivot. I think that the basis for the mid-June start to the rally was on this notion of a pivot and pricing in sooner rather than later rate cuts. I think that the only conditions that would give a green light for the Fed to initiate rate cuts so soon after such an aggressive hiking cycle would be a more dire economic scenario or more deterioration in the labor market than what I think is built into the cards. But I think a pause at some point, maybe not right after the September meeting, we do think that the Fed is going to be able to just kind of take a breather. But that's very different than a quick shift to rate cuts.
Well, what if the CPI does, in fact, show really large improvements? We know what's been taking place in fuel and many other parts of the inflation curve, if you want to term it that, some more than others, obviously. But what if there's real improvement next week? Does that change the paradigm for how you would view stocks from here?
I think it's a better backdrop for stocks. It's not necessarily a green light for the Fed to quickly move to pause mode. As long as you see a still fairly tight labor market and strong gains there, not to mention the fact that Powell and pretty much everybody on the Fed has talked about there needing to be a series of lower lows, not just 2 months following a peak with still elevated levels. I think if the labor market had already deteriorated and we were seeing a retreat in inflation over the course of several months, that might be a more near-term green light. But I don't think the Fed wants to kind of declare victory too soon, given their emphasis on this being a process, not simply a look back at a peak, either at the headline or the core level. So yeah, beneficial for the equity market, but doesn't necessarily change the near-term trajectory for the Fed.